insight that we got on our channel today. We got some interesting insight coming in from JK Cement as well, and that's what sets us up for our special segment, Insight Edge. Today, Nigel joins in with the key takeaways from the management commentary of JK Cement and the highlights of the numbers that stock doing well. Nigel.
Well, JK Cement, it fired up its own stock with the commentary. Not just that, even for the industry, things are looking up. Let's run you through the big takeaways out there. Now, in the past year, their grey cement volumes were up by close to around 17%. And they have mentioned that they have outgrown the industry. Industry could have grown by around 10 to around 12%. Now, what the management is saying is going ahead, they're likely to see double-digit growth of around 15% in FY24. So from around, on that base of around 14.2 million tons, or they're going to see another 15% growth, and they're going to outbeat the industry, which is expected to grow by around 8 to around 9%. So that's positive. On the EBITDA per ton, they were guiding for an improvement. We're looking at the consolidated EBITDA per ton, which has jumped up to around 750 rupees from sub 600 rupees. They're saying that in the second half of this year, they're looking at EBITDA per ton of around 1,000 rupees odd. How does it come about? Remember, they have their Panna unit that is now broken even. It's a new unit which is functioning at around 60% capacity utilization levels. So profitability out there improves. Since we are seeing a big growth in volumes, operational efficiency will come about. And the third factor is that input costs have fallen drastically. Pet coke prices have fallen, which is very, very good news. And the last time I checked, pet coke prices is down more than 50-60% odd, which will be good news. Cement prices, they're saying prices are more or less stable. First time we haven't seen any price increases getting into the monsoon. But they're expecting that post-monsoon, maybe we'll see a price increase. And what will help realizations is now premium sales as a percentage of trade volumes, well, it's only around 9 to around 10%. By the end of this year, they're talking about 15%, and post that, they're looking to take it to around 20%. Why is premium sales good? It gets you a premium, and also the EBITDA per ton gets a bit of a fill-up. They're saying that, it's much higher in premium sales. On expansions, we quizzed them whether or not they're interested on Sanghi industry. They said no. We're looking at organic growth itself, and they're focusing on two units. They have close to 3.5 million tons that are coming on stream. One is Ujjain as well as Pragyaraj. So they continue to focus on that. Finally, the net debt is close to around 3,000 crores. They're saying take into account their capex. This debt is likely to consolidate at these levels or maybe start trending down as well. Put all of it together, it's good news for them because volumes will spike up, EBITDA per ton will improve. And also they said for the industry, the EBITDA per ton will improve by around 100 rupees per ton. Let's hear out what the management had to tell us earlier today.
In terms of our growth in FY24, we are expecting to grow 7 to 8% more than industry because we do have new capacities which are there with us. So I am looking at a double-digit growth of close to 15% in their business. 1,000 rupees per ton in terms of our EBITDA margin would still not be very high. So that, of course, remains the directional goal for industry. In terms of pricing, as you said, I think we in cement industry are eternal optimists. We always hope that, things will improve because the kind of demand-supply gap that we have, it's always going to be a challenge to, see the price increases coming very soon.
All right, Aurobindo Pharma.